Our daily affirmation: I am, I can, I will, I must. I am, I can, I will, I must. I am, I can, I will, I must. Father, we thank you, we bless you. Such a wonderful day. We thank you for this opportunity. We ask that may you see us through and may we close the week in good profit. Amen. Welcome to QuantCove. This is the 10th of July, and we're about to analyze today's market based on trading view. Great Britain pound USD. Trading view is our platform. That's the platform where we use to analyze all trades. And it's such a wonderful tool, has all the tools you need to be able to understand how the market moves and then be also profitable as you trade. Just know that trading isn't 100% guarantee that you are going to win, but it is a way to be financially free only if you learn well and be able to understand how the market moves, and having no expectation of having a fruitful life because you are trading. Trading is full of discipline, and whoever is disciplined will always make it. Today, we'll be analyzing the Great Britain pound USD, and currently we could see that there is a trade which is already ongoing, and we've entered into the American market, that's the US market session at 12. It started, and currently it's 12:42 GMT. In America, we are looking out for 8:42 American time. Yes, so as I always say, we need to understand the market from a higher perspective, a higher time frame perspective, to be able to draw down whatever setup that we will be executing on the market based on the trade setups. So currently we're on the 15-minute time frame. Whoever is new to trading should also consider checking the courses on the YouTube channel at QuantCove and watch all the beginner lessons, and then also build up with the other videos, including the live that we've been able to analyze successfully, for you to have a very good perspective of how the market is. So as I always say, we should have a higher time frame lookup before we move to the down time frames, the lower time frames. So what is our currently, this is the daily candle, and one of the things that helps us to be able to use the daily candle is for us to know our daily bias. Is our daily bias looking out for a bearish market or a bullish market? Bearish simply means a selling market, a market which is shorting on the market, and then bullish means a market which is moving up. That is why there are two players on the market, bulls and then bears on the market. One day we will explain all these in the beginner class. But currently our daily bias is telling us that we have a bullish bias. So moving down onto the 4-hour time frame, that means we are drawing down from a higher time frame onto the lower time frame before we are able to execute our trades on the market. In as much as there's a candle, there's a trade setup already been taken, you can also learn from it, and we'll talk about reasons why this trade has actually been taken. So 4 hour, this is how it looks like from this main support on the 4 hour, which we could see that there's liquidity sitting here on this support. Liquidity was grabbed and then was tested multiple times before currently we are on the 4 hour resistance that we find ourselves on this level. So this is the resistance level that we are talking about. So we are currently here, and at every good resistance or support, there is a major move that brings up a drawdown or market moving in the opposite direction before it actually makes its move to wherever the market wants to move. So we are going to delete this because we don't need it right now. This setup has actually been running through for some weeks now, and we've touched on it several times. That is why we don't need the top resistance that we just actually deleted. So 30 minutes, this is what the market is looking out for, and we are getting a lot of rejection at the resistance level from the trade setup between yesterday and today. So currently the market is actually meeting a fair value gap in the 15 minutes time frame. This time frame is actually based on the 15 minutes, the setup that we've put up here. So with time I'll put all the minutes indication there so that everyone will be able to understand which time frame the setups belongs to. So now let's draw down to the 15 minutes. Currently, as I said, at major resistance and support, the market actually makes a move. Currently we could see that we have a falling wedge. This trend line that we are seeing, the vertical lines or the diagonal lines that we are seeing, sorry, not vertical, the diagonal lines that we are seeing that they are dropping is actually a falling wedge. When we see market doing something like this, this is called where is this tool, the text? So this is called a falling wedge, and when we see market moving up in this sequence, we can also have a rising wedge. So these are two of the trend lines that today we are seeing on the market, and we will also see that we've actually had such setups already. We could actually see that there's a lot of falling wedges, rising wedges, rising wedge here, falling wedge, rising wedge. But the market does not just present itself with wedges, so you need to actually pay attention to whatever it is that it is doing so that you can follow the price action. Currently we are on the 15 minutes time frame where we take our trades, in as much as we also draw down to 5 minutes to actually see what is actually happening there. But 15 minutes is what we are going to stick to currently. And I urge all of you to lock in your comments in the comment section based on your setups. You can screenshot the setups, or you can basically put up questions in the comment section so that we can tackle them and then analyze them together for all of us to be productive, for us to learn. Bear in mind, QuantCove is a platform where we learn, and this has been a very good platform, and a lot of testimonies are in there. People are saying good things about what we are learning here because we are serious about what we are doing, and we want to help everybody become successful, in as much as we can't make everybody successful. But when you follow whatever is happening here and you are disciplined enough, by God's grace, you are going to be successful. So for us to be able to see trends, these two trends working out, we can have something like this. for the falling wedges, we can have something like this, and then possibly like this. Most often, we are looking out for the breakout on all the trend lines. So you have to look out for where fair value gaps are, where other blocks are, and then or where good market structures are. All these things are called market structures. So where good market structures are, that is when we'll be able to understand if we actually have a breakout or a fake out. I'll show you a place where we had a fake out on the system, somewhere like this. So based on this falling wedge, we could see that the market moved up, it moved down, it moved up and down before we were anticipating that it would go more. But you have to also look at where good market structures are, based on the fact that there are other blocks, there are resistance, there are fair value gaps in between. So you could see that it gave us a fake out and then went to attack the other block, which is currently seated here, and then it continued its journey to the downside. That is why we have to understand how these things work. They work so well, and when we are disciplined enough, we are actually going to make it. Based on the rising wedge, we could clearly see that market could come here like this, something of that sort. It is not 100% on the line based on the structure that we are seeing, but it can also overlap a little bit, break out, fake out, and all those stuff before we can determine and say, okay, if something of this sort, are we going to break out and have further upward movement or a further downward movement? So these are structures that we need to pay attention to, and based on all the time frames, you can have falling wedges, and these are falling wedges, and this is a rising wedge. You can have both falling wedge and rising wedge in all the time frames depending on how you see the market. That is why each and every day when we go live or we put up a video, I always say that we should look out for the higher time frame to know our daily bias, in order for us to move on to the lower time frames for us to execute. And currently we are using 15 minutes to make our executions, and that is why we mostly end on the 15 minutes, in as much as we've been looking at 1 minute and 5 minutes time frame also. So this is basically what we are looking out for today based on the gbpusd. So we could clearly see that the market having a daily bias of a bullish momentum. It has actually moved from this buy side liquidity, which is a support of this zone, and it has created a rising wedge which had a breakout, which was a fake out indeed, and then moved on to a particular level. Currently that level is yet to be retested, because in previous data, when we look at previous times, it has actually been tested before. But is the market going to retest, or is now going to go into a bearish momentum? People may have in mind that why are we always taking bullish trades? That is not the reason here. The reason is what is the market presenting to us as at the time that we are learning, or as at the time that our setups are being executed. So in this case, we have the bullish trade, where we could see that markets did exactly what is here. It went up to this trend, or to this level, which is the high, and it also came down to this higher low, and then created this high, it came to this low, and then created a lower high. It created a higher low, and then we got the low, and then it has also tried to break above, but at this higher low what are we seeing? It is a key resistance. That is why when the market broke out of its falling wedge, we had the market attacking the resistance level here. We can't do so much about the breakout because it has a zone whereby it will always retest. So that is why we mostly say that we should have a 1:2.5 ratio maximum, so that we can at least something of this sort. We could literally have a very good winning position here. But currently we are looking out for a higher movement on the market, and that is why we are analyzing the chart, taking more than the usual 2.5:1 ratio, so in this case, the market has actually hit on the resistance, and as we keep saying, at good resistance and then good support, the market will always react. If it is going up, it will always react coming downwards, and it will be tested multiple times. At this resistance, this is the first time it is being tested. This is the second time it is being tested. Are we going to have this zone from this fair value gap, which the market is currently sitting? Are we going to have it go back to this resistance and it will be tested and then broken on the upside, or it will be tested, or it will be retested, and then it will finally make its move downwards, depending on what the market is actually having for us. So currently, we can boldly see that this support between this fair value gap and this being tested for the first time, it also came about that it was tested the third time. So this is the second time. So this is the first time, this is the second time, and it was tested the third time. So you could see that good zones or good confluences are mostly being tested multiple times in order for the market to do what it wants to do. Bear in mind, we don't move anything here on the market. The market moves in whatever direction that is looking out for. So that is why we have to pay attention to whatever the market does. Someone will say, okay, the fair value gap here has been mitigated. Yes, and there is also a bearish order block somewhere here. But then there is a bullish there is a bullish fair value gap here. But is it valid? I'll say no, because this candle's wick has mitigated this fair value gap here. So it is actually a weak fair value gap, which is not valid. But will the other block seated here, which is a bearish order block, be tested, and then we'll have a downside placement on the market, or will it break above it and go? Let us see what the market is doing. Currently, this is what we are looking out for, and we hope that the market will go in our favor. If it doesn't, and we hit stop loss, it's all part of the game. Bear in mind that without losses, you are not prepared to win. You can't always have a mentality of winning without having the mentality of having drawdowns in life. So let us be realistic here and hope and see that the market will go in favor of whatever setup that we are playing here. So I'm here with you and we are analyzing whatever is here. Let's see the market play, and I will be going on and off based on the mic, and then when there's a good move I will come, when there's a bad move I'll still come, and then we'll discuss it more. But for the meantime, or in the interim, lock in your comments in the comment section, and even send screenshots as to whatever you are looking out for today, so that we can all analyze it together and then be successful. Cheers. So currently we can see that the market is pulling down from this trade setup, and possibly we should head towards this support, it being retested again. Let's see how the market fares here when it actually position itself here. So based on what the market is doing currently, we can check the 5 minutes time frame to see if we still have further downside market before the actual move from the upside. So this is what it looks like based on the 5 minutes time frame on the trend line that we just explained, based on the falling and then the rising wedge. And the market here on the 5 minutes time frame, we have an order block. Ideally, this is a reversal candle, so that is why we are seeing that the market is actually coming down. But with time, we are also going to see that we have um, a trending market here, and it is also a falling wedge. Look at what it's doing from here to the top and then to the downside here before it went to the top. Now it's here. So are we getting this as the fake out on the 5 minutes before the further down, or is this the final move that it's actually going to have to break below? Let's see what the market will do. So in the meantime, we are going to delete this because we don't really need it. Let's move back to our 15-minute time frame and analyze. So on the other side of the trade, we are currently seeing that this candle is becoming a bearish. In fact, has become a bearish candle. But then, are we going to see rejections here based on how the candle closed? So currently, we have about 4 minutes 30 seconds for the candle to elapse, and then we'll see where the next candle is going to take us to. Okay, so we have 3 minutes 30 seconds more for this candle to elapse, and then we'll see where the next movement will be. Currently, based on this trade setup, after coming all the way to about 50%, we could see that it has retraced back into almost entry. So this is what the market is presenting to us. Are we going to have further downside after the market retest the support zone, or are we going to have a bounce back from this zone onto the top, or are we actually going to have a rejection after the new candle form? Or let's see what the market has to offer to us. So we are seeing some small rejection after this um, 30, about 25 seconds more for the candle to finish. Let's wait for what the new candle is actually going to tell us. If we are going to have purely rejection zone here before it continues to its zone. I mean, it's new movement based on what the market wants to do. Currently, we are bullish on the market, but the market has actually retraced from up to 50% all the way down to almost our entry zone. We are still in the market, so this shouldn't discourage anyone. We should clearly see all the good signs in it, that we are learning and we are marking all our zones correctly for the market to have its way based on what it wants to do. So we can see that this rejection has actually come in for us, and we hope that the next candle will actually move in that direction on the bullish side. But currently, before the candle elapses, we have a new bearish order block forming around this zone that we need to consider. So let's actually bear that in mind. So currently we are having rejections on the market from the downside. So let's still be in the momentum of what the trade is telling us, and the upside still holds for us. We are never out of the game, and as I said, this is not a place to predict, this is a place to learn. The market has moved from point zero to about 50% of whatever trade it is before reacting to the resistance. As I always say, resistance at a good resistance or support, there'll always be a reversal. So it was expected, and for the market to retest wherever it wants to move to, you need to also pay attention to what movement it is. Then we'll be successful from there. Cheers. So currently we can see that the market is heading towards a retest of the fair value gap and support zone that we have marked on the entry at the entry level. So let's still stay put and hope that the market will retest and not break further below into losses. So this is what the market is presenting to us as of now. Let's see what the 5 minutes time frame is actually doing. Okay, we are seeing clear rejections here on the 5 minutes time frame. A retest level is still valid in this setup. Okay, great. There's a lot of rejections going on, and hopefully based on the movement of the market, we should have an upside very soon. That means whoever has missed from the beginning can actually enter based on the the retest. So you have to actually be patient enough. If it comes to entry, then you need to wait for the retest or the breakaway from that zone so that you can know where exactly the market is going before you can execute your trade. Put all your comments in the comment section, and any trade setup that you have, you can also log them in the comment section so that we can analyze them. Yes, at QuantCove we learn and we learn from each other. Cheers. All right, so the market is the current candle currently sitting at 30 minutes and a few seconds. Let's see if we are actually going to go up or we are going to go down to finally test the zone which has been tested multiple times. Currently, it has been tested two times. This should be the third time if it comes to our entry level. Let's see what the candle will do when it elapses. So we can see that the market has tested or retested this zone 3 times. Now, are we going to have the push upwards, or is actually going to reverse after seeing this other block, which is bearish, and then this also seated here based on its bearish position? Let's see what the market will do. Currently, this current candle, which is bullish, has about 5 minutes more to elapse, and let's see what it will do on the market. Okay, so as it stands, our current candle, which is bearish at the moment, is having about 10 minutes based on the 15 minutes time frame to conclude its movement. So we will see if it's actually going to consume the bullish candle which precedes it, or is going to continue the move on the upside. We are still in the game and currently not in loss. We are still in the profit zone. One of the tricks that I want to spell out today is such that anyone who trades should actually have a zone about 15% or 30% into the profit margin, so that you will be able to shift your stop loss into that zone when your trade moves into half of the profit zone. So instead of this trade hitting about 50% of it and then waiting for it to come and retest the zone for us to see if it's actually going to go further down or continue its movement up, we will move when it gets to that zone, we're actually going to move stop loss to about somewhere here, so that even when the trade takes us out, we still have some profit locked in. But for us, based on the fact that we are using systems to trade, we can also wait and then leave our setup that way. But then every trader must also understand losses on the market, and it's very, very important for you to also take some losses to see how it is when you lose, and then not just thinking delusional about winning mentality. Yeah, losses are part of the game. So to what we can see here, the market has finally retested the zone, and it has actually hit us into the negatives. So are we going to see liquidity being taken below here, which is where our stop loss is, or we are going to get market trending up after this retest on the zone that we are currently on the support side? Bear in mind, we made about 50% of that trade from this zone, and this is not the end of whatever we planned on actually executing on the market. The market has come back into our entry zone, whereby we need to be patient enough. But then anyone who wants to take the slight loss could do so. Yet people should know that this is not a place where we are predicting. We are actually learning, and we are making moves based on what the market price action is giving to us. But as I said, based on this setup, we can also see a bearish momentum in there, where we have the bearish order block from here. In as much as the market has not closed fully, has about 3 minutes to close based on this candle. So we can see it pushing further downwards, seeking liquidity from this zone. Yeah, so we can name this the bearish order block, and hopefully we should be able to test if the market is actually going to go down to sweep liquidity more. Then we should be able to take trades from this zone when it retests this zone, sort of this side, and then. But currently we are still in the game. As much as we are in loss doesn't mean we are not in the game. We are in the game. So basically, if this is what the market is looking out for, then we can have something of this sort, targeting this fair value gap here, or the mid of this fair value gap, which is basically around the side. Yeah, so we can do that. So let's hope that we are still in the game, and we haven't been taken out completely. Yeah, but in the interim, this is what we are going to leave the trade to be like.
It's like a $500 million company.
Let us also bear in mind that in as much as we have this drawdown on the market, there is a bullish order block also sitting here for us. So which one is it going to respect? Which one is the market going to respect? Let us see what happens. This candle has actually overtaken, its wick has overtaken the wick of the preceding candle. That means that we actually have a valid bullish order block here. So are we going to have it like this and hit here before it goes up, or are we going to break beneath it? Let's see what the market does. So as it stands, we can see that from that bullish order block that the candles came to test, we are heading back onto our main trade. Now we are back into profit, and let's see how the market goes in our favor one more time after winning over 50% from this zone, and then it retraced back into entry and some part of loss, which came to about half of loss. Currently sitting at a bearish order block. Let's see if that bearish order block is actually a blockade, which will allow the market to go further down, or is actually going to mitigate it and then go further up for our trade to be successful. Let's see how it plays in. And one of the things that I'll always say is that always go back test strategies that we have actually studied here from time to time, and let's be patient on the market. Because patience is very, very important when it comes to the market. Anyone who never wants to see losses will never see the benefit when it comes to your doorstep. You will never see it, trust me. So in here, we need to be disciplined enough to be patient. We have to be consistent. We need to practice backtest and do all that. That means this weekend, whatever the result of this trade be, we are definitely going to see to it in the weekend backtesting session, whereby we come to you live either on Saturday or on Sunday. But as I always say, make sure you put your notifications on so that whenever we go live, your notification alert will pop up and then you will know. And currently, as it stands, we are back into profit, and the trade is not totally bad. Let us sit tight and enjoy as it goes. Anyone who wants to take can also take, because we are not far from entry, but currently in a bearish order block zone. Let's see how best the market saw above it, and then we'll see if we'll be profitable once again or we are going to lose this trade. But let's go back to test a few things. Let's see at major support or buy side liquidity, the market actually went up, retested, and then pumped up. The same thing we are seeing here. It went up, retested multiple times, and then into the other block that we have from the bullish side, and currently it is going up. Are we going to see the market go further up? Currently we don't know, but based on our setup, we can see that our daily bias is still bullish. So we have to know. One of the things that plays on the market each and every day, from next week we'll be teaching it. So stay glued to the screen, and always make sure you subscribe to QuantCove and share with your peers too, so that at least they can also come and learn from QuantCove and then be profitable. Not that we are promising you any success. No, here we learn and we execute. We don't trade predictions here, but we are disciplined enough for us to be profitable. Not 100%, but with a good margin. So let's sit tight and see what happens on the market. At every consolidation or consolidated zone such as this, we need to allow the market to break out for us to know where it is going. This could have broken upwards, but there is a rejection here that actually made the market go and seek liquidity in this zone, creating a support zone whereby the market came to retest. Now look at this side of consolidation. The market also broke downwards, came to seek liquidity in the fair value gap here, and then so we can actually mark it somewhere here, and we'll see that yes, based on about the almost half of the fair value gap, the market went up and then went to seek liquidity based on whatever is here on the resistance level. So we can go on and on and on and on, but let's just stay glued to whatever the market is offering to us. Currently, this is our market setup, and we hope for the best. So currently, a new candle has formed, and it's going to go for a 15 minute run. Are we going to are we going to experience the fact that this bearish order block will be a blockage and then it will come down into a stop loss, or is it actually going to mitigate it? Currently, we've been able to sit 50% of that order block, and hopefully, if our setup still holds, then that means we are actually going to mitigate it. And then we'll go and then see if this bearish order block will be a blockage also. Bear in mind, there are so many blockades, just like when you're driving on the street and you get to a security checkpoint, same as in the market. So we have to be aware of all the blockage that brings about drawdowns on the market. So we can clearly see that the market is reacting to the bearish order block here, which is currently on its way to take us out of the game. That means that this trade doesn't hold, and of course this is the stop loss that got hit after a 50% trade setup being in profit. So this trade on a higher risk to reward ratio wasn't worth it. Possibly this half would have been worth it, but the high that we projected wasn't worth it. So always try to use a risk to reward ratio that will actually help you to take short trades if you are a day trader. If you are a swing trader, then possibly this stop loss would be so small, possibly like this, and then you can go a bit further. But if you are a day trader, you should trade cautiously, because news can actually take you out, and yeah. So this trade is actually invalid based on the risk to reward ratio that we took. But after reacting to the stop loss, see what the market is doing. It's actually reversing into the top side. And you see, because there is liquidity sitting here, as I mentioned, there's liquidity sitting here right at the stop loss. So currently we can see that the liquidity sitting here is so strong such that if we are taking just a short trade and we wait for liquidity to be grabbed here, this could be our next entry. But as I said, the trade was not a good trade for the long-term position. So based on the liquidity that was swept, we have a new support or buy side liquidity. It's zone. We still have these positions valid. We need to treat them as such until they are taken out. We need to treat them as such. Clean setup. This is what it is. So this clear rejection tells us that the bulls are still in control, and then bears are trying to just actually step in the game to see how they can survive, but the bulls are still in control. This small body that is left and has about 3 to 4 minutes to elapse is now embedded in this green. That means green is still in control. Alright, guys, until then, I urge you all to follow QuantCove and subscribe, share with your friends, and always do great for yourself. Have a lovely day.